Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment has broken back above all levels of previous resistance, which are now turned support. In fact, what we can notice is that we had this previous monthly support here from which this green candle was created, which the market then broke to the downside and has now broken back above. So this previous support is now once again turned support at this level. Now, if we have to identify what triggered this huge move to the upside, apart from the fundamentals, we can see that on the technical side, the market had reached exactly the previous low. In fact, from here, all this previous rejection to the upside was created, and we can see how the market here just tested exactly that same level of demand and support, and that is what the market started rejecting to the upside. And we can also notice that in creating this move to the downside, the market has also created this M pattern. And in general, after the creation of an M pattern, what we could expect is for the market to create a rejection to the upside, as explained many times, at least for the completion at the neckline, which in this case would be this previous support and resistance. But in this case, since the neckline was already exceeded to the upside and the market has already broken the neckline to the upside, all that previous resistance, as we have already identified, is now turned support. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice, first of all, that also here on the weekly, we did have the creation of this M pattern. The market tested the support and rejected it to the upside, exactly as you would expect after the creation of such a pattern. And at the same time, we can also notice that also from a weekly standpoint, the market has now broken back above previous weekly resistance from which all this move to the downside was created, which is now turned support at this level. We can also notice that as we have an impulse, if we want to measure the correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement lining up exactly with the previous resistance turned support. Therefore, inside of this area, we actually have confluence of support because we have both the Fibonacci level and that previous resistance turned support lining up exactly inside of the same area, creating confluence of support inside of the zone that we could expect this market to test and then to reject to the upside. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, what we can notice is that, first of all, I did speak about gold quite a few times in the past. In fact, I spoke about gold when the market was here. I explained all the reasons for which we could expect a rejection higher, and that is exactly what the market gave us. Then we had the creation of this red candle. From here, I explained all the reasons for which we could expect a retest of this red candle, and that is exactly what the market gave us. Then we had this huge impulse, and I explained all the reasons for which we could expect first this correction and then the continuation higher. And again, that is exactly what the market gave us. And then from here, I made another breakdown explaining all the reasons for which we could expect this correction and then the continuation higher for the creation of a new daily higher high. And again, that is exactly what the market did. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, in a situation like this, until the market will remain above this previous daily resistance which is essentially the previous high, which is now turned support, we could simply expect more bullish continuation. But as we have already seen on the weekly time frame, there is a good probability to see first a correction and then the continuation higher. Now, if the market here from a daily perspective would actually start a correction, so if from here the market would actually start this move lower, that would be perfect, because from a daily perspective, it would create an M pattern. Now, after the creation of an M pattern, as I explained many times, there is a high probability of getting a rejection higher, at least for the completion of the M pattern at the neckline. In fact, as we have already seen, all this move to the upside actually was triggered by the creation of that M pattern on the monthly time frame. So from a daily perspective, if we will have the creation of this M pattern testing that confluence of support on the weekly time frame, that would definitely increase the probabilities of seeing more institutional longing inside of that confluence of support area, which in turn would further increase the probabilities of a potential move higher. Now, why do I say more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market, and we check the data precisely for gold, what we can see is that with the last report, net positions got increased. We went from having 71.4k net positions all the way up to now having 112k net positions, with 11,000 longs added with the last report and 30,000 shorts getting closed. So with the last reports, institutions have been adding longs and closing shorts, further increasing the probabilities of a potential move higher. So if the market will correct to a confluence of support area, instead of a confluence of support, there is high probability of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection higher away from that level. So if the market will correct to this confluence of support, how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I'd really suggest that you go and check out the transparentfxtrading.com website, which you find linked also in the description. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97, one-time payment. And if you scroll lower, you will see that at the moment the time to join with the current special promotion is starting to run out. So I really suggest to go and check it out as soon as possible, and directly from here you will find the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.